Hey, rich friends, it's your girl Cha-Cha reporting live from the Money Mantra, and we're back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders. So if that's something that you are interested in, make sure that you do subscribe. If you get to the end of this video and you find that it's helpful, give it a thumbs up, leave a comment to let me know what you learned, but more importantly, share this video with another trader. So in today's quick video, we are going to be going over some basic Forex concepts. It's something that we've talked about a lot, but it is nice to always just revisit what exactly it is that we're looking at. And I feel like I say that in a lot of the videos, but the more you hear it, the more it makes sense. I recently read somewhere that it takes about, you have to see something or hear something 15 times before it actually sticks in your mind. So we're going to go with that, and I'm going to keep repeating this until it actually makes sense to you guys. So before we actually get started, we're going to make our time worthwhile, and we are going to check the news first. This is something that you want to get in the habit of doing when you're trading. Now, if you're a beginner, it's nice to know at the beginning, but the more you trade seriously, the more you'll look into these things and realize how they're actually affecting your trades. So we're going to glance at the news and see what's going on. I typically like to trade USD pairs, so I'm just looking for anything that would be like USD, Euro USD, NZD USD. I'm just looking here to see if there's anything red or anything alarming. Tuesday morning, we can look and see the date here. We can see Tuesday morning, some news about USD is coming out. I recommend you guys watch the Forex Factory Explain video so we can see if this is going to be Euro USD going up or down. Again, I always just like to review Forex Factory because it's helpful. And you never know when it's going to click, like why this is important. So I can see Tuesday, November 14th at 8:30 a.m. is going to be a report, and it's a red folder. This means that the market is going to make a impulsive move. It's either going to be impulsively going up or impulsively going down. So here, I just like to look here. Actual greater than forecast is good for currency. So I like to look at the usual effect, and I like to look at the why traders care. That's the only two sections I'll check. And then what that means is if you look at these numbers over here, it says actual and it says forecast. So if actual is greater than the forecast, that's good for the currency. So if we were to go back to September 13th, 2023 and look at the charts, the market probably went up at this time. Simply because if actual greater than forecast is good for currency, then looking at this would mean that you would want to get in for a buy. So eventually you could use the news as additional confirmation, but I'm just going to glance at it. So when we look at the charts, it'll hopefully make sense. More USD Wednesday, Thursday. Okay, bunch of rest stuff. So when you're trading, after you check the news and you decide which currency pair that you're actually going to look at, you probably know this, but you can look at the chart on different time frames, and you're going to see the same thing on multiple time frames, but it depends on your patience, how much patience you actually have to be in the trade. It depends on your lifestyle. You may be somebody that's busy, or you have another full-time job, or maybe you have two jobs. Maybe you're in school and you have a lot going on, so you don't want to spend that much time looking at the charts. You can actually do the same things on a smaller time frame as long as you're understanding what's going on with market structure. So this is not a live trading session, but if you wanted to make your profits in one sitting or one session, which could be, I would say, a small scalping session is about 2 hours, you could definitely do that, right? You don't have to wait in your trades for hours or days or weeks, but you'll see that the benefit to staying in your trade longer is obviously making more money. So we're gonna go ahead and take off everything. Hopefully I'm still clear, not breaking up. So we're going to we're just looking at NZD USD. You can just follow along here, or you can pull it up on your phone. I know some people like to do things side by side, right? So we know that the market is always going to be we're just going to start from what we can see on our chart because it's such a small time frame. We don't really need to see that much stuff. If you chose this time frame and you want to make your profit in a short amount of time, I would say put like a 2-hour cap on your trading session. You have that time in your day. Come down to the 5-minute time frame, right? The market could be going down or it could be going up. It can go down, up. Like it's just always going to be doing the same thing. And your job as a trader, of course, is to understand the news, but then just understand where you're going to buy or sell. And of course, this is going to be based on those areas of support and resistance, right? And support and resistance are places in the market where you're either going to buy or sell. And you usually know this is happening when
one so chat.
Is somebody on mute? Okay, I don't know. You usually can see areas of support and resistance. Once you start to see that the market has slowed down, like let's look at this area of the market here. We can see that the market pushed up. We see a big green candle, right? Meaning that the buyers had control of the market for that time. But then we see what is called a doji candle, right? A doji candle just looks like a T. It looks like that. And that's usually a sign of a reversal, right? You'll find plenty of dojis on the smaller time frame, just like you'll find them on the larger time frame. But when you see that, it's a visual representation that the side that was just in control is no longer in control, right? So we have the doji candle followed by a strong red candle. This is confirming that the market is probably going to go down, right? It's literally a visual representation of the market switching sides. Like, if we could just see that based on the strong push up on the green candle, the doji candle, letting us know the market's going to change direction, and then the large red candle showing us that the sellers have taken control. And in an example like that, we can see we would have secured about 20 pips in an hour and 40 minutes, which isn't bad. If you're using a $1 lot size and you're in this trade twice, that's about $42 that you could have made, or you could have gotten to this trade multiple times. Or even if you only used a 50-cent lot size, you still would have made about $11, which isn't bad. Because you can, again, enter that trade twice, make $22. And you can do this multiple times a day or enter the same trade multiple times. And this is on a smaller time frame. So if that makes sense, you guys can drop a 7 in the chat. Just if you can see the opportunity on a smaller time frame without having to wait for so many hours, right? So if we're looking for reversals at the top, if you want to look for a sell, just literally look for a place where the market, it was going up and then it literally stopped, right? I just want you to look at this chart and specifically right now, just focus your eyes on the sells. And every time the market like really sold, like just look at these. I want you to look at what happened before that trend really started. We had the push up, right? We can clearly see like a visual stop. It stopped. The next candle, it didn't get much higher. And then we have the sell. We have the same thing here. We have the same thing here. We have the same thing here and here. When the market is going to sell, you'll literally see it, right? You'll literally see that it just stopped going up. And the same thing when it's going to buy. It'll be coming off of a strong downtrend, right? Then we can see it literally stopped, right? It actually stopped here, right? It had a little pushback. It stopped here again, and then it went up. right? So you don't have to secure hundreds of pips. You can focus on increasing, getting more capital, increasing your lot size, and getting less pips. Or even if you have a small daily goal, you can see how many times you can do this in a day. Let's just say you work at a job, but your job really isn't that demanding. You can be sitting there and you could have made, let's just say you used 50 cents and then you had 20 pips there. You could have made $11 and then another $11 and then another $11. And that's all within, it's not too much time. This is probably like 2 hours, 2 hours, 2 hours. So still making $60 or $50 like in 2 hours, like overall, it doesn't have to be one time. It could be, but there are so many opportunities to trade in the market. So when people say they don't have time for trading, I'm just like, just look at your chart on a smaller time frame and see what's really going on. Like NZD USD, it literally just stopped right there. So I would say a small reversal could potentially be happening, right? We can also look at another currency pair, Euro GBP. It was going up and it looked like it just stopped. Like it doesn't really look like we already see a couple of wicks here. It doesn't really seem like it wants to go much higher. So we know we can secure at least 20 pips off of that, right? Even if you're using, I mean, nobody wants to use a 10-cent lot size, but imagine if you just did it all day. Like this, it's a lot, but you can really get into 30 small trades a day for 10 pips at 10 cents, and you still made $30 just because you were able to come in here and look at this. So that's the 5-minute. You should probably focus on, if you want to use the 5-minute time frame, I would say try to focus on securing like 20 pips max. That's kind of like definitely a scalper. Look at this. If we would have been in here at this time, I'll just back it up. We see the market was on a very strong uptrend, but then we see it just stopped, right? Not only did it stop, we can zoom in. That wick is telling you it literally started to resist a higher price. It doesn't want to go any higher. So let's see what happens on the next candle. It really sold, and if we're just going by these two candles, we have the breaker structure there, and the market continued to sell, right? Based off of it just stopped. Like that's all I can say is like when it comes to supply and demand, once you see the market just stop, like really start looking for, and this won't be every single time, but there are endless opportunities to get into the market. Like make sure your indicators align too. So we're still on the 5-minute. And let's put some indicators back on the chart. I'll just use my strategy and we'll see when things align, right? Because you should be checking price action first and then your indicators, right? Don't just rely on indicators, because in the last few classes, I've shown you how indicators can be telling you wrong, but price action is telling you something different. So look at price action first. So that's what we did. And I just put the indicators back. Now let's look at price action. Wait, let me change this, right? We can see, and this is even look like it's about to buy right now. Euro GBP, if you're scalping or your phone right now, we can look right here. This was the example. We can see that the market was going down, and then it literally, I'll just even back it up for y'all too. Hold up. Let me actually back it up there again. We can see the market was going down, but then it literally just stopped, right? But now we can look at our indicators like, okay, we see the market just hit a hard stop. It's going to buy, right? We can do market execution, or we can set a buy limit or buy stop somewhere in the zone where we see that it clearly just stopped. And then look at the indicators. Is it above the EMAs or whatever indicators you have on your chart at the top? Let's look at our momentum indicator. It's not positive yet, but we can see our stochastic looks like it's about to cross up. Right now, this is just a 5-minute chart. We don't have to rush this trade. We can literally wait 5 minutes and see what the next candle is going to do. So let's see. The next candle, okay. The next candle stopped higher than the previous stop, meaning that this market is most likely going to buy, right? Just based on that alone. And then, wait, let's go back. I don't think I could go backwards again, y'all, but I wanted to see right here. This should have been when the momentum line started facing up, plus the stochastic crossed back into the blue. And we know that once that happens, the market is going to buy. So the confirmations are the candles above your EMA, momentum facing up, stochastic facing up, blue above the orange. And you probably could secure like a good 20 pips off of that. We can see. And it literally came back down to the black line too, which would have been the buy limit. So let's see if we do 20 pips in this trade on a 5-minute time frame. See, I don't know how high it went up. Let's see. Almost, but if you're sitting there scalping, you still would have been able to secure a good 15 pips, which is not bad. If you're using $1, that's $15. If you're in that trade twice, that's $30. If you're in that trade 3 times, it's $45. The best thing about being right in the trade is it's the opposite of drawdown. Like drawdown just means like your trade is just currently not in profit. But if you get into a trade at the right time and it is in profit, all of that is yours times 1, times 2, times 3. As long as you can just understand what is happening when the market starts to resist. Like now we're going to move up to the 15-minute time frame. And again, the longer you decide to stay into these trades, the more profit you'll get. So we just saw that on the 5-minute time frame. We could secure about 15 pips, 20 pips. That's not bad. If you have even $50 in your account, you can get in for $1 lot size. And if you're in the right side of the trade at the right time, because you're understanding the supply and demand, you're understanding the market is starting to resist. So it's either going to sell or it's going to buy. You can really just start to see your profits take off, right? Now, you won't be right all the time, but when you're right, it's going to be so nice when you're tripling your profits. Because it feels bad to lose, but it feels good to win. Because I don't win all my trades, but I just keep trading. So if we look here, all right, here's a good example. So I'm just going to rewind it back to, we can just go there, actually. Now, we're looking at this market here. Let's just say you're in at this time, and this is the, that's the washing machine, y'all. So this is the 15-minute time frame, and I'm just pretty much showing you how you can get the same confirmations and signals, but you would obviously have more profit if you had the patience to stay in your trade a little bit longer. So I'll actually turn on the indicators for this as well, so we can look at everything together. So in this trade, firstly, whenever you see, this is just a tip, you don't have to do this, but you can see how it works for you. Whenever I see the candles between 2 EMAs, I usually just wait to see like what's going to happen, because usually the market is really indecisive. But I can see that this candle, that's why understanding the highest high, the lowest low, the open and close of the candle is important, because we can see that this candle came down here, but it didn't close down here, meaning price really didn't want to go lower. Knowing where candle closes is important, because if it's not closing low, it's closing high, that's another sign that the market wants to turn around. So if we were in the market at this time, I probably wouldn't make a move right now, because one is still really in between both. So that's confusing. This is facing down, this is facing down. I wouldn't want to take it for a sell, because again, it hasn't closed that low, right? And that's something that you want to pay attention to. Is like, just because it got to the lowest low, that don't mean that it closed there. So let's go to the next candle. Okay, so again, we can see that the market was stopping, right? It was selling and then it was stopping. Once you see the market starts to stop, At the bottom, you want to start looking for buy opportunities. So I always want to come back to the point where the market crossed up on a replay, but I be forgetting. So let me just do it like this. We can see it was even before. Even though this candle was red, we can see it was still stopping here. So essentially it was in a demand zone, right? It came back into the zone. The stochastic crossed back up. The market started to buy. Right now, we could stay in this trade. Typically, I'll just do about 40 pips just because it's safe. But the purpose of this lesson is to show y'all that you can hold for longer and really take less trades. Like, I'm just getting in the habit of taking like 4 trades a week because I'm really just letting them go. So we're gonna see what happens in this trade. And you can even make your stop loss shorter. It doesn't have to be 40. Let's do 20. So let's see what happens. Okay, TP was not quite hit yet. And this is if you are in your trade for days. Are we at the recent time? All right, so again, not quite 40 pips. So you can, I still would do 40, but that's because I'm looking at mines on the higher time frame. So the smaller your time frame, as you guys can see, the smaller amount of pips you're going to want to secure. So on a 5-minute time frame, I would do 15 to 20 pips max. And I think I went over this list before. On a 15-minute time frame, I would do 20 to 25 pips max. And this is so you're not disappointing yourself, right? And this is if you just want to make sure you're securing your profits, because you can just set buy stops as the market continues to go up or sell stops as the market continues to go down, but make sure that you are securing your profit. So that's the 15-minute time frame, and we can see how long this took. Okay, it took about, the highest we got was here. Okay, it's almost 40. So it took about 5 hours to secure 40 pips. So that's really not bad. Before it took, was like an hour and 45 minutes to secure like 20 pips, and now 4 hours and 30 minutes to secure 40 pips. Again, if you're using something like $1 lot size, that's $40 if you're in this trade at the right time. Just really respecting that market structure and knowing that once the market starts to struggle, it's most likely going to reverse, right? It's most likely going to reverse. So if you have the patience, and let's just say you have a full-time job, or let's say you just happen to be up at night and you wake up and you want to trade. So you get on the charts, you find something, and then you go back to sleep, and then you wake up and then your trade hit TP. That's awesome, right? So that's if you have the patience for that. But the more patience you have, the more profits you are literally going to be able to secure in your trades, just because you're waiting longer and you're staying in the trade longer. So I'm just going to zoom out for a second. And you guys can let me know if you have any questions so far, or if this is making sense. If it's making sense, drop a 7 in the chat. If you have any questions, oh, Lisa has a question. Let's see. Oh yeah, I actually don't have a video, but I can show you. It's very quickly. It's very quick. So over here on the side, you want to select it starts off as a brush. So look for the brush tool and then find the rectangle, and you can just put the rectangle on your chart. Now, if you want to save it so that the green is supply and the red is demand, you just would click here, this box here where it says templates. And then if I say save drawing template as demand 2, right? And then I made another one, and I said save drawing template as supply 2. When I go to put it on my chart, let's just say I'm looking for a demand, I just would select my rectangle tool, click the template, and then click demand 2. So That's just how I do it. And if I was, again, going to do the supply, I would just highlight it, select my template, supply to. Oh, that box. Okay, so that was a unnecessary demonstration. The box to show the amount of pips. Yes, I do have a video on that. I think it's called How to Calculate Your Pips and Profit, and another one is called The Easiest TP and SL Tool. And they're both about 7 minutes long. So, so now we're gonna look at Euro GBP on an hour time frame, and we're almost done, y'all. I'm just showing y'all the benefits of holding your trades, like the pros and cons of scalping, and the pros and cons of holding and not folding, because trading is not supposed to be stressful. Like, I know we probably stress about it because we're trying to, oh, you're welcome. I know we're probably stressing about it because we're really trying to learn it and we really want to be profitable and we really want to make money quick. But the more time you put into studying, it's like you'll just come across something that's going to make it all click. It's not like you're consistently learning new stuff. You're just trying to find the things that's going to make it click for you. So, I really hope that supply and demand is a concept that will stick for you. Because it's one of the simplest ways that you can trade, even without all of the indicators. So we're just going to go back to this point in the market. No, I want to go back even further to the red candle. So we can see the market. If we look at this in an hour time frame, we're just literally looking at the same chart on a bigger time frame. So all of those smaller candles and time frames that we looked at first, they're just condensed, right? So here's another great example of, we can see that the market was selling, like it was so selling with so much energy, and then it just stopped, right? It really just stopped. So we already see, you guys know I like 3 wicks. 3 confirmations are pretty good for me. So if I see 1, 2, 3, that's already 3 rejections in the demand zone, right? So for me, now I'm going to start looking for my actual buy confirmation. So let's just see if I put everything on here. The first thing I notice is the price action, but I don't quite have what I'm looking for on my indicators yet. So I know Joe asked this question in the chat last week. If you don't have everything you need, just simply set a pending order, because you can kind of see what's going on, right? Once you notice that the candles are stalling out, whether it's at the bottom or the top, that's when you want to say, okay, I know this market's going to turn around. I don't know when. This is the perfect time to use a buy limit, because the market's either going to sell for a little bit because we can see that resistance, or it's just going to take off on the next candle. But if you happen to be on the charts and you see like an opportunity about to happen, let's just say the next candle was about to form, and let's see what happened with the next candle. Okay, we can see that it tried to push down and then it really stopped. You can be watching a Netflix show and trading at the same time, and then you come back and you be like, okay, let's just say the market had that black line was your buy limit. Now you know your trade is triggered. You put your stop loss at a previous low. So let's just say this line here is our stop loss. But our trade should be triggered if it already tapped back into the demand zone, and we're going to see what happens, right? Now for this one, let's actually do 40 pips, right? Because this is our hour time frame, which is what I be looking at when I'm doing my analysis. So we can see this market is going up. TP is hit, and we can see how long it took. It took about 2 days, right? So that's just one trade you're in. That's about 51 pips you secured. If you're using $1 and you're in this trade twice, you just made $100 in like 24 hours, which isn't bad because you're not staring at your phone all day. And that's just one trade. You can do this on multiple trades. Now, the cool thing about holding the trade, no matter what time frame you're looking at, we can literally see that another demand zone is forming right here. So that's how I would assess, like, am I going to stay in this trade or am I going to get out get out of this trade? Like, am I going to stay in this trade or am I going to get out of this trade? I'm just going to literally reassess and see like what's happening. So I can see another demand zone forming. I see everything is still pointing to buy. So let's just say I decide to stay in this trade for another 20 pips, right? And we just want to say we're going to stay in, or let's even drag it to the previous high, right? And let's see what happens, right? The market again tapped into the demand zone again before. Look, it didn't even hit the stop loss. If the stop loss was below the previous low, and it's still going up. Now, a person who has the patience to be in your trade for the entire week, and even if you only used $1, imagine if you're using more and you enter this trade twice, you have made $200 on one trade. Now imagine if you are in this trade 5 times. That's a lot. That's $500 just from freaking supply and demand and being able to hold and not fold. So these days, I've been really trying to hold my trades to like 100, 120 pips. But also securing profits along the way. Like, you can have multiple trading styles. You don't really have to do one. You could just really do what works for you. And then of course it'll be the same thing with the 4-hour and the daily. Like, imagine somebody getting into the market down here. Like, let's just say you looked at the market on a 4-hour and you got in down here. Just because you noticed the stall out, the reversal signals, we're going to play it out. We're going to see how high it went out and see how long we would have had to wait and how much we could have made just by setting it and forget it. Yeah, I like that too, Lisa. I just got tired of being stressed about trading. Like, to be honest, like, you really have to just get sick of your own BS, and you really got to get out your way and be like, this is really not hard. Like, am I really gonna get so mad at some shapes and colors? Like, imagine, like, I don't know, it's kind of like acting like a toddler again. Like, imagine teaching look at this, same thing happening. Imagine teaching your toddler how to draw shapes and they just getting frustrated because they confusing a triangle with a square. It's like, it's the same thing. Like, just learn it and it will be beneficial to the rest of your life. So if we gotten down here, as somebody who don't mind holding a trades, I'm just moving into that space. Whoa, this is somebody who stayed in a trade for almost a month. See, I'm not there yet, but as somebody who would have stayed in this trade for the month, that's 130 pips, $130, $260, $1,300, $130,000, right? Depending on what you risk in 20 days. So it just depends on how long do you want to wait. Do you really just want to wait 2 hours? Do you want to do this before work? You want to do this while you at work? You want to do this on your hour break? See how many pips you can catch? You want to do this while you laying in bed at night? You want to do this on your day off? It's like, it's so many opportunities, no matter what your trading style is. So you pretty much, if you're using, holding is a lot less stressful than scalping. That's is really true. That's why I want to do that. Like, I have so many other things I want to do with my time instead of stressing about trading. So yeah, we can really get the concept of supply and demand in our head. We'll just be a lot better off. So pretty much, if you're just going to be focusing on this strategy solely, and I'll even take the indicators off again. No, actually, we need them for this example. If you want to use this strategy, we can take off these though. This is a very simple strategy. You can just use the stochastic and supply and demand. So you pretty much would enter the market when the stochastic is crossing up. As we can see, it crossed up, and I'll put the vertical line here so we can see that. Enter the market when the stochastic crosses up. Exit the market when the stochastic crosses down. And that's really all it is. That's all it is. Murder, she wrote. That's about 100 pips in 5 days. So if you stayed in this one trade for the week, imagine if you got into 5 trades, 5 different trades that you all just analyzed and was like, I'm killing it. 4 trades go your way, 1 trade don't. You still made $400. $400 just from looking at some colors and shapes. I love that. So yeah, we can just look at another example. You want to get in the market when the stochastic crosses up. You want to get out of the market. You can get out here when the stochastic crosses down. And even still, with this many pips, okay, again, that's still about 50 pips in a week. That's not bad. That's really not bad. And then we don't even want to talk about these people who have the patience to stay in for months, because it's not me. But if somebody did, in 2 months, you can make however much money that is. Do the math. But yeah, it's pretty interesting. You just really got to know yourself and stop trying to rush the money, and then also stop trying to combine. It's like you're trying to combine a scalper mindset with a swing trader trading style, and it's like it just doesn't work. Like you have to really kind of pick one. It's like if you're scalping, do everything in a scalper's mode. If you're swing trading, do everything in the swing trading mode. Like you can be a scalper and a swing trader, but whatever you're doing at that time, follow the rules of that thing, right? Like don't look at the chart on a 4 hour and then expect to be in profit on a 5 minute, basically. So that's really all I have for you guys today. Hopefully it really helps. You can just look at this chart, and I'll just go to another just another pair so we can really just look at the stochastic entry and exit strategy. Again, when it crosses up, you enter. When it crosses down, you exit. So let's look here. We have our demand zone, as we can see. Let's make sure it's green. And then we have it crossing back down. Oh, this was actually a fake out. But we had it crossing back down, but we still could have secured, okay, about 40 pips, a little over 40 pips in 8 hours. So you can go to sleep and wake up to some profit. That's pretty nice. That's my favorite kind of profit to make, actually. Like I like to, because sometimes I'm up late, I like to do my trades at night and then just wake up and be like, wow. Or I like to, I don't know, if I'm up early in the morning enough, then I'll just be like, all right, I'm going to trade between 7 and 9 because the market is really busting at that time. Like it's really going crazy. So that's all I have for today. I hope that it was helpful. I hope that it was another piece of the puzzle to your trading journey. I hope it's making sense. There are plenty of videos that you can watch. Again, I'm trying to convert all of this into a better learning system. So I will be releasing that in 2024, so that everybody can really learn at their own pace and rewatch stuff and do stuff like that they really need to focus on. I try my best to, once I have one-on-ones with people, to give you guys follow-up videos based on your specific needs. And I send you guys the recordings that I know most people don't watch, but you do have all the resources you need to be successful. It's not about learning more information. It's about being more repetitive with the information that you understand and actually practicing. Like you're not going to make money if you're not practicing. You're just not. Like it doesn't make any sense. And if you are scared, why? You have a demo account. You're scared to lose fake money. That's crazy because people gamble in real life, but scared to trade fake money. Like I don't understand that. So I don't know, guys. I just want everybody to be successful and profitable because it's so easy. Once you get it and once you see it, you really can't unsee it. So I'm going to make sure I'm checking the news, dropping more trade ideas, posting more on TradingView. I'm just working on so much stuff right now. Yeah, practice. Just practice. That's really all you got to do. So that's it, guys. Unless anybody has any questions or want to review something else. Yeah, unless you guys have any questions or want to review something else. You're welcome. Yeah, be consistent. It's so much fun to make money because once you get it, it's literally one less thing to stress about. It's like getting into a really good relationship. Once you find a good person, you're like, okay, I could rock with you for a minute. It's just one less thing to stress about. Once you figure out what you're going to eat for dinner, it's like, that's one less thing to stress about. So the quicker you get trading, it's just like it's one less thing to stress about. But it makes so many other things less stressing about, like money. Like, oh, I don't gotta worry about my phone bill. I don't gotta worry about family vacation. Trading is definitely gonna pay for that. Like, it's not gonna be a question mark. It's gonna be a exclamation mark. Absolutely. So, um, all right. Thank y'all for coming to class. I'm happy we were actually able to get through it. If you guys have any questions, you can text me. You can drop them in the chat. You can schedule your one-on-ones, and that's all. So, have a good night, everyone.